if you have limited buying power, then, well, you know, you can still trade. Just get the like, I had a limited buying power too for a long time. I traded like a $3,000 to $5,000, $7,000 account for years. And then when I started learning setups, started learning position sizing, risk management, suddenly my accounts were hundreds of thousands. Where did I enter fastly short? Well, first I entered on opening range lows yesterday, but I got stopped out of those entries. But then I entered when it started breaking the 60-minute ranges, high 78s, and then I think I added high 77s, if I remember correctly. Let's look at the 5-minute chart. Yeah, so I added here I 79.30s when it broke out this range here. It looked a little bit toppish, and then I added when it was about to lose VWAP, high 78s. Those are my two add spots. I added 20,000 shares here and another 10,000 shares here, and then I covered 3,000 before the close. Those are very specific, guys. You gotta have a very specific method. Can't do anything randomly. You have to do everything systematically. Just do the same thing over and over and over again. Ceres? No, avoid this thing. It's a very choppy stock. You have no edge in this kind of a stock. Don't try to trade it. It's too choppy. It doesn't have any clean trends. It's like random moves all over the place. Stick to the clean moves. Like all of the stocks. Like just look at the stocks that are in my portfolio right now. They all have clean moves. They're just super clean. They're just riding these 10, 20-day moving averages. Something like CERS. It's just all over the place. Do you have some mathematical system? No. Like I'm aware always like how much I'm long and short. Or at, you know, it may not be the exact number, but I know about like plus minus a few million. But you know, but nothing like super exact. I try to, you know, keep track of it like to the penny, but I just feel it's too much. If you start focusing on the, you know, like the super small details, you kind of miss the big picture. And I'd rather nail the big picture than, you know, be obsessed over the tiny details. You are not? No, I'm not denying, no. Yes, easy stock trader. That is correct. The first 60-minute chart is actually a 30-minute candle. That is absolutely correct. Why not use a 65-minute chart? What? Wait. So how many? Wait, 65 minutes. How many minutes are there in a trading day? It's 6.5 hours times 60 minutes. 390 minutes divided by 65. Oh, so you get 6 candles instead of 7 candles? Nah, whatever. Yeah, yeah, but the thing is, then you get the candle break like 5 minutes, like 10:05. You get a candle break, and next candle break is gonna be at 11:10. Like also one thing I do, I have alerts set like 10 minutes before every even hour. I have an alert set because when I stop streaming, I'm not at a computer. I have my laptop with me, so I get like my alarm goes off of the phone. Then I know, okay, it's 10 minutes or 5 minutes, sorry. So like 10:55, 11:55, 12, like these are US times, like market times. My alarm goes off, and then I just flip up my computer. I look at my setups. I look at how the candles are developing, and if there's nothing to do, then I don't do anything. I catch up on Twitter. But if I used 65-minute candles, like rhythm, like it would be at different times. So it's just easier with. Oh, okay. So the last candle is 30 minutes, right? So the last candle is 3:30 to 4. Okay, so they do it. Yeah, yeah. Look. Also, the reason why it's better to have the first candle 30 minutes is because the opening range high. Because the 30-minute opening range high gives you much better signals than if it would be 1 hour. DraftKings. Oh, wait, what? Oh, wait, this one looks vulnerable. Wait. DraftKings. I just shorted 20,000 shares of DraftKings. This thing, if the market start pulling back, like this thing, the rising 50 days, 21% lower. It's below the 10-day, it's below the 20-day moving averages, and it's starting to build lower highs on the 60-minute chart. The moving averages on the 60-minute chart are turning lower. There is some momentum shift going on here. Yeah, we'll see. This is a very extended name. So what I'm doing now, I'm sizing down longs and going shorting the technically weak ones. Do you think studying quantitative economics in university is valuable if you want to become a trader? Yes, if you want to work for a hedge fund, sure. To become an investor, completely useless. If you want to make tens of millions or hundreds of millions of personal net worth, you should probably skip it. But if you want to have a fancy job and someone to boss you around, yeah, that makes sense. Exactly. You're gonna get brainwashed. You're gonna learn a lot of things that don't really work in reality. Well, if you want to study, I don't know, that sounds like a 5-year thingy. During those 5 years, you can already build a significant net worth. If you put that time into studying setups and market mechanics instead. You don't have to go to school for that. It's actually better if you don't go to school.